Yeah. Yeah, what I've done is put some sort of an outline together that you can take with you. There are 2 pages there. Uh, First is the outline, and then we have sample W-2 and 1099 attached. Let me just explain who I am and why I'm here. Um, I'm a priest of the diocese, and I feel like it's my obligation to try to share some of the experience I have with vestries and clergy. Um, My name is Bob Critelli, and I'm an enrolled agent. And they say, well, what's an enrolled agent? An enrolled agent is a special designation by IRS. And in order to be an enrolled agent, you have to pass examinations, 3 examinations, and you also have to renew your enrollment with IRS every 3 years. And you have to have had 74 hours of continuing education in order to maintain your enrollment. The enrolled agents are the ones who represent you before the IRS. There are 2 agents that you probably are dealing with if you have to deal with IRS. There is the revenue agent and there's the revenue officer. The revenue agent is the one who would audit you, and the revenue officer is the one who collects your taxes. But let's begin. Okay. First of all, the outline that you have in front of you really is taken from the 215 Tax Guide for Episcopal Ministers by the Church Pension Fund. So, you can get that online. I called the Church Pension Fund and I said, could I have 40 booklets? And they said no. So what you can do is you can order this online from the Church Pension Fund, and or you can go online yourselves, or you can refer this 215 tax guide to your tax preparer, okay? And then they can page through this and they can take the information that they want. All right? Okay, let's move on because we have a lot to cover, and I know you're going to have some questions, and I will be here through lunch. So if there are any individual questions that you have, we'll move along. So first of all, who is a minister? Well, a minister is anyone who's preaching the gospel, and especially if they're preaching it in a church. So they are a minister. Now, the problem that we always run into is, are ministers self-employed or are they employees? And the answer is yes. They're both, okay? So there are 2 taxes that come into play every time, we talk about ministers and taxes. One is you always have income tax, and then you have the Social Security, Medicare tax, and then in many states you also have a gross income tax. So, that's what you have. And recently I had a clergy person come in who was on extension, and he said, would you look over last year's tax return? He said, I got a refund. And he said, and it really looks spooky. There's something wrong. I shouldn't have gotten a refund. And yes, they missed the whole housing package. So, so we had to do an amendment on that. But, these are some of the things that can happen. So let's look at how do ministers how do they report their taxes? Well, first of all, I think, let me come back to a point. When someone comes in and they want you to do their taxes, it's almost like I have to sit there and accuse them. And we don't want to do that. This should be a give and take. It should be a continuing education process throughout the year. Circumstances changes or whatever. So I always like to start with the document. What did you work out with your vestry? What did you work out with them? Is there any kind of a contract? What does the contract spell out? There must be some sort of compensation. There must be wages. There must be a housing allowance. There must be expenses. How are they reimbursed? All these things come into play. Someone mentioned before about paychecks and payroll service. What paychecks does is they break out on the W-2 a top stub, and the top stub has gross compensation, it has housing allowance, it has all these things, and it also has a breakout for federal and state tax purposes. Now, I mentioned state tax purposes only because the states, in each individual state, treats housing allowance differently. A lot of people move over to Pennsylvania to escape New Jersey taxes, only to find out that there's a tiger waiting over there for them as well. And it so happens that Pennsylvania will tax your housing allowance, okay? So First of all, the clergy person usually, if you turn to page 2, you'll see there a W-2, okay? And the first thing is box 1. So all the compensation goes on box 1, if it's truly compensation, okay? And again, I would be looking at some sort of a document that would say what's in that. And so, you have wages and so forth that would be in there. Now, there's an option here. People seem to think that you pay your taxes on April 15th of the following year. And people seem to think that if you file an extension, now you don't have to worry about anything until October 15th of the following year. And then all of a sudden, they file the taxes only to find that they have about a $2,000 penalty on that. And they say, what did I do wrong? And the theory here is simple. You must pay your taxes as you earn your money. So if you're earning your money in 2014, you can't expect to hold it all out and wait until October 15th to finally pay the tax man. That money is due as you earn it, and usually it's done through estimated tax payments. So clergy people, you have 2 options here on a W-2, okay? In box 2, you can have your parish withhold for you, all right? And remember, any withholding or estimated taxes that you make all go into the same pot. So there's this one fund for Bob Critelli. And in Bob Critelli's pot, there is all this, the wage, the withholding that goes in there, there's estimated tax payments that go in there, and then what happens at the end of this whole thing, then IRS says, okay, this is the amount that we pay to Social Security, and this is the amount that we keep, okay? So you have an option. You can either have federal withholding and or both if you want, and you can make estimated tax payments. And if you'll see, the estimated tax payments are due, usually when you file your tax return before April 15th, there are 2 taxes that may be due there. You know, the tax on the 2014 tax return, and also your first estimated tax payment, which will be due by April 15th. The next estimated tax payment would be June, the next one September, and then your state estimated tax return, tax estimate is usually due in December, and the federal is due on January 15th, okay? So it gives you a little bit of time to look over, what your earnings are, and then, make some adjustments if you need to. They call it an estimated tax for a reason, because it's estimated. So you do your best, you try to work it out, but I try to give people a target. And usually the target is something like this. I say, depending upon your tax bracket, I would say if you're paying less than 20% in taxes, you might be missing something. Because your Social Security alone is 15.3. Your state tax is going to be probably 2 or 4, okay? And then your income tax bracket is going to filter into that. So, when you're looking at doing estimated tax payments, you have to say, well, what goes into that component, Now, if you have other deductions, you can itemize your taxes and so forth, there's something else there. But let's talk about housing for a minute. Am I okay so far? Okay, let's talk about housing. Some treasurers will look at box 14 of that W-2. And in box 14, they might put what the housing is that they have allocated to housing. Now, is the clergy person stuck with that? No. So if you are employed and you talk to your vestry about housing, really, and I've had some vestry people and I've seen them, bristle at this, that housing allowance is too high. Why do they, they're avoiding taxes? No, the way it works is this. If I designate $14,000 for housing, or if I designate my whole salary for housing, I can do that. That, as a clergy person, is my business, not the vestry's business. All you have to do is say, make sure that that resolution says that. So now I designate $40,000 for housing. but I only use 30, modified by the actual expenses and the fair market rental value with utilities of a furnished home. It's the lower of either one, okay? Now, if I have $10,000 or $15,000 left over, that becomes taxable for income tax purposes, okay? So the cleric is not getting away with anything. What they're doing is making sure that their housing is covered, right? So, yes? Right. If there is a difference in what the clergy person actually takes, fine. Just remember that with that resolution, please, it cannot be retroactive. Okay, it cannot be retroactive. Now you may have a priest come in June, and so you can adopt a resolution in June. You may change again in September if the person is married, divorced, or whatever they've got. So that can change. The only thing is it's got to be contemporaneous. You cannot backdate it, right? So that's housing. And housing is very interesting because, as I say, the housing is taxable for Social Security purposes. And, again, we talked about the fair market value of that housing and so forth. In our area, it's funny. New Jersey's kind of like two states, if you look at it. It's two states. You have the Philadelphia, New Jersey, and you have the New York, New Jersey. And the housing values are very, very different. So, what we use in Laurel Springs, New Jersey, or Clementon, New Jersey, or Magnolia, New Jersey, very different from what you're going to have in Bergen County, So you have that New York influence. So when you pull out numbers, the best thing to do is make your best calculation and know, what you're adding to, for Social Security. Now, you own your own home, okay, and you have a housing allowance. And the housing allowance is for $40,000 or whatever it is. And by golly, you use it, okay? And included in that housing allowance is your mortgage interest and your taxes. Now, this drives preparers crazy. When you go to a seminar and they talk about clergy taxes and they say, and now the clergy person can double dip. Now, everybody's looking at this, okay? And Wisconsin and some of these other states are saying, this isn't fair. But you may then, if you've used that mortgage interest and taxes to work out your housing, you can also bring it over to Schedule A and take that deduction again, okay? You take it as interest, you take it as taxes, and now as long as we're on Schedule A, you need to be a little careful when we mention the expense accounts or expenses that you have. If you are filing as an employee and you are taking, the money and you're expensing, taking the expenses yourself, when you put it on a Schedule A, it offsets by 2% of your income. You're not going to get much at all. So the accountable plan makes a lot more sense for clergy than to take that money and run. Because what's going to happen then is it's going to show up and it's going to be complicated and you may be looking at a problem down the road. So a great benefit is the ability to exclude the housing for income tax purposes and to be able to use those expenses on a Schedule A. Same thing with your professional expenses. Now, we okay so far? All right? If you are a supply clergy, and this for vestries, we have supply clergy that come in and they mostly retired or doing part-time work or whatever. And I'd say, well, how are you reporting? Well, they really are reporting as self-employed. Okay, they really are reporting as self-employed. Now, they should receive, if you see on the page 2, you have a 1099. If you, as a congregation, pay more than $600 to any clergy person, you must issue a 1099 to that person, okay? You must issue a 1099. if you pay more than $600 per year, calendar year. Yeah, okay? And, it goes on on box 7 there. You'll see that it's, it's right there on box 7, okay? All right, housing for retired clergy. Housing for retired clergy is a tremendous benefit. I am so pleased when someone comes in who's retired and I see that Northern Trust and I see their Social Security and, I look at that and I say, okay, now let's really look at this thing because it's a wonderful benefit. And what's missing from this whole thing is that darn Social Security payment. You don't have to do that. So what you have now is a 1099R that says gross on box 1, and then there's a box underneath of it with an X on it, and it says taxable amount not determined. Not determined, okay? Now, what happens then is people go, oh, that's great, that's zero. Well, maybe it is and maybe it isn't. This is where, again, you add up all your housing expenses, your utilities, your maintenance, all the things that we mentioned before that apply to housing apply here. Again, offset by the fair market rental value with all those things included, okay? And so if there's $50,000-$60,000 on there and you've got $40,000 worth of expenses and you've got the fair market value to work that up, you've only got $20,000 of income, taxable income, okay? Now, then take those the interest and real estate taxes and again, bring them over to Schedule A, okay, and deduct them there, along with, your charitable contributions, and all the other good things that go with that, okay? So, if you're retired, that housing allowance really comes into play when you receive that 1099 from Northern Trust. Now, I've seen this happen where people will say, well, I have housing allowance from the church and from Northern Trust. What do I do now, okay? Well, you can't exceed the cost of housing you. So you have to work it out as, you take one, the other, or a little bit of both or whatever, but as long as the cost for housing you doesn't exceed the fair market value of that house, okay? Now,
so Bob, if you're retired, if you're working, you have to have that resolution for your vestry. But when you retire, you don't have a vestry, you don't have a resolution, you just put in how much you spend for housing.
Exactly. Keep a list. Keep a list, It doesn't mean, you're doing your paper towels and that kind of stuff, because I've seen that. Somebody comes up with a big list that, no. It's the basic stuff that we've mentioned before, okay? But it's a great benefit. It's a wonderful benefit. Now, along with that, from the church pension fund, you're probably going to get a little letter, and the letter will say, this is the cost of your insurance, and that's called a PS58 cost. What happens is any insurance that's paid to you with a value of more than $50,000 as a benefit, according to your age, there's a chart, and there's a certain amount of money that's added to your income. That's not subject to Social Security. That goes on box 21 of your form, but be aware of that. People say, what happens if I don't put all this stuff down? Well, here's what happens. There is a process that IRS has, and it's a matching program. And you could get, it's an audit of type. And what happens is you get a letter, and on a letter it will have CP 2000. And CP 2000 means that what they've done is they've taken all the 1099s, W-2s, and everything else, 1099Bs, interest dividends, and they put them in this column. And then they put what you've reported on this column. And then they say, here's the difference, you owe us. Now, in a lot of cases, it's not a question of you scamming the IRS because they've already got that information. Many times what happens is you just misplaced a 1099B or something like that. So what happens then is you may have stock transactions of $20,000, $40,000, which IRS has, But you never ever did a Schedule D saying this was my investment in that. So the only thing IRS is waiting for is a copy of, the Schedule D, and all that will go away. So, usually in January, you will receive all the forms that you need, mostly all the forms that you need, in order to really prepare a tax return. Make sure you put those aside and bring those to your tax preparer. If you have a resolution from the vestry, that's wonderful. This way we're not guessing as to what your compensation really is. Now, about automobiles, about expenses. If you have an accountable plan, it's great. But the first thing that IRS usually looks at is automobiles, auto use. And what we do is we try to, we just take the full amount of the allowance or whatever, and we take, if we did 20,000 miles this year, I guess 20,000 times whatever the allowance is, that's where, I've got that. That's going on my 2106, and I'm fine. No. As we mentioned before, commuting to your church is not a deductible item. I suggest that there are two ways in which you can report automobile. One is actual, and the other is mileage, right? Either actual or mileage. Actual would be your gas, insurance, depreciation, all the rest of that, okay? And again, if you do the actual, your tolls and your parking are separate. If you do the mileage, all right, that's a lot easier. The mileage is a lot easier. And why I say that is if you're like I am, you're not always using the same car. You probably, whatever car's last in the driveway or whatever, that's the one you're using. So if you have an appointment book, and most of you have, if you keep track of your mileage in that appointment book, the question that IRS asks is, do you have proof for the mileage? And everybody puts down yes. Is it written? Yes. And you hope, okay? But that's what required for automobile deductions, okay? Now, SECA and the Social Security offset is income. There are two ways to treat that. One is if you have a Social Security offset that's being paid by your church, it can be included in box 1, but if you do it in box 1, you're going to pay Social Security on it again. If you put it down in box 21, which is other income, all right, then you won't have to do that. That's one of these things you can discuss, okay? But according to the church pension fund, that's where they would put that Social Security offset. You can save yourself some money by doing that. Okay. Yes.
Can you say that again slowly?
Okay. If the church is reimbursing you, for the SECA, for Social Security offset, okay. If you put it in box,
For the second 50%?
yeah, for the .07, for the $7.65 per 100, okay, all right. If the church is reimbursing you for that, all right, you can put it in box 1 as other, right there along with all your compensation, but you'll pay Social Security on that, okay? Because everything in box 1 is subject to Social Security, everything, right? Added to that would be your housing somewhere else. If you put it on line 21 as Social Security offset, right, then there's a good opinion that says you won't pay Social Security on that. That's where I put mine. Pardon me? I got two questions. No, on 1040, on Form 1040. Form 1040, other income. Yeah, that other income line gets a lot of use, Yeah. No. Yeah, Connor?
Just clarify that. You're saying that as the diocese requires, half of our Social Security is reimbursed.
Right.
How about that first half?
Right, that's right.
And then if we list that as other income
Mm-hmm.
in the appropriate box, you don't have to pay Social Security on it?
It would, you have it, on box 21, you have the option to pay Social Security or not, okay? Anything on box 21, you have that option, right? So what I'm saying is, I would say no. I would say no, because it's not an earning. It's not an earning.
Say no,
I would say not taxable for Social Security purposes.
But it is for income tax.
Oh, income tax, yeah, yeah, you put it on box 21, sure, yeah.
now, compliment that from the treasury standpoint, we want to report that in box 14, not as income, as other income.
You can put it there. Yeah, the box 14 is for informational purposes. Then it's up to the clergy person with their preparer. Yeah, 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 you know, yeah, yeah. Yeah, my feeling is to keep that W-2 as clean as possible, because the more stuff you put in there, and the only other thing on the W-2 that I don't want to neglect is all the way down on the bottom, box 15, don't forget your state income on that, okay? What's taxable for state, okay? And again, if you're a Pennsylvania resident, you're going to look at that housing on that line.
You said that New Jersey taxes house multi?
No,
No.
no, Pennsylvania does, okay? Yeah. Okay? As a treasurer, the only thing you need to do is take your resolution, okay? What's compensation, right? All the compensation goes in wages, except for housing, okay? All the compensation except for housing goes there. I'm sorry? Housing, if you want to, can go in 14. It doesn't even have to appear.
This is what we were talking about before, of this idea that and when we say compensation, we're talking about cash that is actually received by the cleric. So it's the base salary, so if we say that's 50,000 plus housing subsidy of 16,000, that's 66. But if the parsonage allowance resolution says that 24 of that is going to be used for housing, then that number in box 1 magically changes to 42.
Because that's the only thing that's taxable for.
That's the only thing that's taxable for income. Be- Right, right, and regardless of, so the diocese says the number is 16, but that doesn't necessarily mean that's what clerics are restricted to. As Bob has been saying, if the fair rental value of the or whatever you decide to put in there, you just have to prove that you've spent it. So again, I know some clerics who, they live in very nice houses because both the person and their partner work, and they can use all of their income toward the house. So that number in number box 1 could be very close to 0, depending on how they choose to do it. But they have to prove that they've spent it. But as far as the IRS is concerned, it's not taxable income.
Okay. All right, moving down the line, there's medical. And this is where we get into, at the last seminar I was at, which was just last week, it was on the Obamacare, and it was interesting that there was a IRS agent sitting in front of me, because they're learning about the Affordable Care Act as well as we are. And somebody piped up and said, "We have a problem with this. I want to bring this to the group here." And it was, my rabbi has a contract with our synagogue. And the contract says that this is his salary, and added to his salary is a medical benefit, because his wife is providing insurance for him and the family. and you can't do that, okay? Now, you can't do it unless you report all that on box 1, okay? So you can't just say, this is his compensation, and then this is for medical. Once you talk about housing, you're into another area, and anymore, once you talk about medical, you have to be careful that any payments that are made are according to ERISA, according to the Affordable Care Act, and are not paid in any way directly to the clergy person. They can be paid to an insurance company as a premium, but otherwise, as I say, the penalties are $100 a day. What will happen this year is you're going to get a new form. You'll find that will be mailed to you, and it's called a Form 1095. And Form 1095 will report to you from your insurance company the fact that you were covered by insurance for all the months of 2015, okay? And if you weren't covered for all those months in 2015, there is a penalty that is figured out, on your tax return. So when it was happening last year, it was interesting. A lot of people went to the, went shopping for insurance, and they found out that they were entitled to a subsidy. And they did, they took it, and they got the subsidy. And then after a while, they found out that their income went up. Oh my. And they really weren't entitled to that subsidy anymore. Well, when they filed their tax return, that subsidy showed up as a payment that was due. Showed right up on a tax return.
Did you put in the estimated income for the next year? Or
Yeah, you put in the estimated income, and hopefully, you're on the money there. Okay, so be aware of that Form 1095. The other difference is this: if you are doing supply work and you're out there, and for all intents and purposes, you're strictly self-employed, you're filing a Schedule C, and if you are in any way making insurance payments for health, don't forget that you can deduct from the front of your return as a self-employed person any insurance payments that you're paying for your health. Okay, that's a very, very nice benefit. Self-employed health insurance.
you can't deduct your Medicare premium.
That's a self-employed, yeah. Yeah, at self-employed you can, yeah.
Save me a bunch of money.
Yeah, yeah. Yes,
So one of those churches that we came to reference to the street, and his wife paid the insurance.
right.
So you said as of July 1, so do I put 6 months worth on the W-2, or do I have to show the whole year's worth of the 7,500?
Certainly as of July 1st, you must show it in box 1.
So do I show half though?
I mean, if I were in your shoes, I would show the whole thing on box 1.
Let that person know.
Yeah.
Because it's a complete change.
Yeah, let them
Might
know.
not be prepared for tax.
Yeah. What was funny is I had gotten a number of phone calls from clergy who were reimbursed because their spouses had the insurance, and the parish was paying them for the premiums that they would have had to pay. And the clergy people kind of sheepishly said, we never accounted for that. We thought, well, as long as we had other expenses, that we were okay. No, you can't do that. You can't do it, yeah. That's a whole different thing. That's a medical thing. But then, now, it has to be according to a plan. What you'd have to have, that's the health savings account, and we'd have to have a highly deductible plan, okay? And it would have to be according to a plan. Otherwise, you can't do that. Yes?
Let me ask, it says in your notes here that
Yeah, yeah, yeah. Wait, you-
People keep a track and books them, that was 4,000, you're able to,
What you'd have to do is the vestry would have to get together and say, look, we're not allowed to do this anymore. Let's negotiate with the clergy person and find out, what we can do, but it goes on box 1 and is taxable. Okay, that's the trick. It goes on box 1 and it's taxable. It's not just here's a check, Father. You can't do that.
as far as we're concerned about it, they can keep those line items in the budget so that when the next person comes along, you need to pay.
Yeah,
You understand that
yeah.
the income's got to go down.
Yeah, we were out, I'm part of the loan and grant committee, and we were out to one of the churches, and what we found out was that as they worked out their budget, when you got into the medical, and they were looking for a new clergy person, and they'd had things pretty well figured out, only to find out that the clergy person that they were looking at was married with children. And so the medical insurance premium then all of a sudden went to about $40,000, So when you're doing your due diligence and you work that form that Val was talking about, you got to really know what the premiums are going to be, okay? Yeah, yeah. So, as I say, the whole healthcare thing is up in the air. It's really something. We have employees, for example, who have we have employers who have over 100 employees, okay? And they have to provide insurance for these people. If they do not provide health insurance for these people in 2015, the fine is $2,000 per employee, less 30 of those employees. So it's a big hit, and those fines are not deductible. So there are a lot of people out there that are hurting. But IRS is serious, and now what happens is you have Health and Human Services, you have federal unemployment, and IRS are the 3 agencies that regulate this whole thing. So, and as a preparer, we certainly didn't intend to be in the HR business, and here we are. Anything else, and we can get to lunch? Yeah. 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 Mm-hmm. No, use a 1099, either miscellaneous or non-employee comp, it's called. Okay? Thank you, John.